Please start, sir.
Good afternoon. Yesterday we discussed about return procedure. Any question, any query from our previous session? Return of income. Anyone have any question, any query? Please raise. Now, in last session we discussed about um, return and then self-assessment. Comes to intimation. Little bit we discussed in yesterday. We discussed yesterday. Now intimation, section 143, subsection 1. What type of adjustment is possible? Any arithmetical error in the return, incorrect claim apparent from any information in the return means if any item which is inconsistent with other entry in the same return or where some arithmetical mistakes are there and where you are claiming deduction which is more than the statutory limit prescribed by that section. If these type of mistakes are there, that can be rectified. If there is any incorrect claim which is apparent from the return, that should be rectified. If you are claiming any adjustment of losses and the year in which the loss was earned, loss was incurred, the return was furnished after due date, so loss is not supposed to be adjusted. If however you are trying to adjust those type of losses, that can be rectified. Disallowed any expenditure which you are supposed to disallow considering the audit report furnished by the auditor, but you have not considered that disallowance in your return. Further, if you are claiming deductions under this section, even though you are filing your return of income after due date, the tax interest fee shall be recalculated. After considering all this adjustment, your income would be revised and the tax interest fee on that revised total income are recomputed by the system. And if after recalculation, if any amount is payable by you or any refund is supposed to be granted to you, that should be determined. And once as proceedings is complete, intimation process is complete, if there is any refund, that will be granted to you. And if some demand is there, they will send you a demand notice. The intimation shall be sent, no intimation shall be sent after expiry of 9 months from the end of the financial year in which return was furnished. We discussed all these things yesterday. Now, inquiry before assessment. Your assessing officer may inquire anything before passing any assessment order. There are several subclauses, several subsection: issue of notice, making inquiry, direction for audit, opportunity of being heard, and estimation by valuation officer. First of all, we are going to discuss issue of notice under section 142, subsection 1. Subsection 1 is divided into 3 parts. Your assessing officer may issue a notice to you for the purpose of making assessment. The assessing officer may serve. Serve means the notice not only issued, it should be received to you. If the notice is issued but it was not received by you, we can consider that notice is not served on you. The notice is not served on you, that means it will not make you liable to respond, or whether you responded or not responded, you are not supposed to respond those type of notices which are issued but not served on you. Here the notice should be served, that means notice should be received by you, then only it will functional, otherwise that notice is not valid. Your assessing officer may denotes he may or may not. It is not the legal duty of your assessing officer to issue this type of notices. He may, if he thinks, he may serve a notice on any person. That means he may, it is not legal responsibility of assessing officer to issue this type of notices to you. Assessing officer may serve a notice on any person who has submitted a return under section 139 or in whose case the time allowed under section 139(1) for furnishing the return has expired. Number one part, this part is notice can be issued. Notice may be issued by your assessing officer if you filed your return of income. And another part is stating that the notice may be served on you if the time limit which is prescribed under section 139(1) for filing of return, that is due date for filing of return, has already lapsed. Now, what type of notice? What would be the content of the notice? First one, notice to submit a return if not submitted on or before the date is specified in the notice. That means if you fail to file your return of income within due date, then your assessing officer may serve a notice to you regarding your submission of return. However, it is not mandatory for assessing officer to issue or serve this type of notices. If he wishes to best judgment assessment, he may directly shift to best judgment assessment. You cannot challenge that, sir, you are not you did not, you fails to serve this type of notice. You did not serve notice regarding submission of return. That's why I fails to file my return of income. This is not your excuse. We should not consider this type of excuses from the assessing officer. This is not your right. This is totally optional for your assessing officer. Number two, notice to produce accounts, document, etc. as he may require. Notice to produce accounts, document, etc. whatever he may require. He may send a notice stating that following accounts or documents are required for your assessment. Please submit. AO shall not require the production of any accounts pertaining to a period more than 3 years prior to the previous year. In respect of accounts, he may not ask, he shall not ask to produce any accounts which is pertaining to a period more than 3 years prior to the relevant previous year. Be careful, student. In starting point, in point number 2, at earlier first line states that notice to produce accounts, documents. However, in this clause, the word only accounts are used. The word document is missing. Is it intentional or it is missed? What is there any difference between accounts and documents, or both are the same thing? In first line, they are stating that your assessing officer may ask to submit accounts, documents, etc. In another line where rider is attached relating to 3 years, where they are using only the word accounts, document, the word document is missing. Can I say that your assessing officer may ask a document which may be relating to 10 years ago from your previous year? Is it possible or it is not possible? What is your take? Or both are the same thing? Accounts as well as document, he cannot ask prior to 3 years. What is your take, Nitaji? What is your take in this regard? Whether my first question, accounts as well as document are the same thing or not? Answer this one. Number 2, can your assessing officer ask to submit a document which is relating to 10 years prior to the relevant previous year? Is it possible? Documents and accounts are different. What is the difference? Accounts is the books of accounts maintained by you. Documents may be like if you are transferred a land during the previous year and that land was acquired by you 10 years ago. In that case, for determining the purchase cost, he may ask document of purchase. That means purchase deed he may ask. That is document. That means the restriction of 3 years are applicable only in respect of accounts. He may ask document for any previous year. He may ask document which may be relating to any of the previous year. The restriction of 3 years is not applicable in respect of documents. Is it clear? Very good. Nitaji, you are correct. Notice to furnish information in writing on such points or matter as he may require, including a statement of his all assets and liabilities, whether included in the accounts or not. However, prior approval of the JC means Joint Commissioner, shall be obtained before requiring to furnish a statement of all assets and liabilities which are not included in the accounts. We already submitted accounts, we already submitted document, then what is it? In which type of information he's required in notice number 3? Sometimes information may not contained in your accounts. Sometime it may not be in your documents, like information like what is the model of your business, what is your business model. The answer to this type of question may not in your accounts, may not be in your documents. So he is asking a write up. What is the modus operandi of your business? You are supposed to fill up. You are supposed to submit in written in your letter. Is it clear? He may ask any information which may not relating to your accounts or documents. Then this type of notice he will serve on you. Notice to furnish information in writing. That means certain information which are not from accounts or document. He may ask some questions. You are required to furnish that information in writing, including statement. He may ask including a statement of his all assets and liabilities, whether included in the accounts or not. However, if he is asking for those assets and liabilities which are not included in the accounts, in that situation, prior approval of Joint Commissioner is required. Be careful. These two notices he may issue at any time. However, this type of notice is supposed to be issued only where you fail to furnish your return of income. Making inquiry 142(2). For the purpose of obtaining full information in respect of the income or loss of any person, the AO may make such inquiry as he considers necessary. Let me know what is the difference between inquiry under section 142(1) and inquiry under section 142(2). Any idea? What is the difference between 142(1) and 142(2)? Anyone? Nitaji, what is the difference between 142(1) and 142(2)? Here in both section he's trying to inquire. He is making inquiry. Then what is the difference between 142(1) and 142(2)? Dear student, under section 142(1), he is making inquiry from the assessee himself. He is gathering information from the assessee himself. Under section 142(2), he may gather information or he is making inquiry from third person. Suppose you submitted that I purchased goods from Mr. X worth ₹2 crore in the particular previous year. Now your assessing officer want to cross verify this fact from Mr. X, then he will send a notice. He may ask he make inquiry under section 142(2). If he is making inquiry from you, then he will serve a notice under section 142(1). However, if he is seeking, he want to verify the information from third party, in that situation he will serve a notice under section 142(2). Is it clear? This is the basic difference between 142(1) and 142(2). Under section 142(1), assessing officer collect information from the assessee. However, under section 142(2), assessing officer has the power to collect information from any source. Giving direction to get books of accounts audited under section 142(2)(a) to 2(d). If your assessing officer, after giving reasonable opportunity to the assessee, is of the opinion that it is necessary to do so having regard to the nature and complexity of the accounts. That means your accounts are so complex, and considering the nature of accounts, volume of the accounts, doubt about the correctness and completeness of your account, multiplicity of transaction, or if you are in business of specified nature, and if it is in the interest of revenue, if is in his opinion your accounts are complex, or considering the volume and nature of accounts, and if it is in the interest of the revenue, he may direct the assessee to get his accounts audited. That means he may direct the assessee to get your books of accounts audited. Sir, my accounts are already audited under section 44 AB, so this order cannot be issued under section 142 2A. No, even though your accounts are already audited under section 44 AB, your assessing officer, if he consider this one subject to this conditions, he may direct that your books of accounts are required to be audited. Sir, statutory audit has been done. I am a company assessee. Statutory audit has already been done by an auditor, even though he may direct you to conduct audit under section 142 2A. Is it clear? Irrespective of the fact your accounts are already audited, if these two conditions are fulfilled, then your assessing officer may direct. Be careful here, may word is used. He may or may not. He may direct the assessee to get his books of accounts audited once again. Such direction can be issued even if accounts of the assessee have already been audited under section 44 AB or any other law for the time being force we already discussed. Such direction can be issued with the prior approval of the boss, that is principal chief commissioner or principal commissioner or chief commissioner or commissioner. Without getting approval from the senior authorities, he cannot issue this type of direction. Further, who is the auditor? Not the choice of the assessee. It is the nominated. It is appointed by the senior authority. That is the person. The auditor may be impaneled in principal chief commissioner. The auditor is appointed from the panelment of made by principal chief commissioner, principal commissioner, chief commissioner, or commissioner. That means senior authority will appoint the auditor, will nominate the auditors who will do this audit. It is not the choice of the assessee. It is the auditor who is appointed by the senior officers, senior authorities. You are required to get your books of accounts audited from that nominated auditor. Such order can be issued at any stage of the proceeding before the assessing officer. For example, your assessment are completed, say on 31st October 2024. One fine morning after Diwali, he is reading your files, and all of a sudden he noticed that oh, your account are so complex. Can he issue the direction, this type of direction? Is he in position to issue this type of direction? The answer is absolutely no. This type of direction can be issued. He can issue this type of direction during the proceedings. That means before completion of the assessment. Once assessment is completed by himself, then he cannot issue this type of directions. Once it is completed by the assessing officer, afterwards he cannot issue this type of direction. However, he can issue this type of direction with prior approval from the senior officer within the process when proceedings is on. Once proceeding is done, when proceeding is completed, when assessment order is passed, he cannot, after that date, he cannot issue this type of direction. The audit report is required to be furnished by the assessee within the period specified by the assessing officer. However, if you ask for some extension, then he may grant some extension, or he may grant extension suo motu. However, the total period that is fixed originally as well as extended period shall not exceed 180 days from the date on which such reaction is received by the assessee. That means, in short, that means within 180 days, you are supposed to submit that audit report with the assessing officer in form number 6B. Then question may arise, who will pay the audit fees? Obviously, who appoints the auditor are required to pay the audit fees. Who appoints the auditor? The commissioner, the senior authority who appoints the auditor are required to pay the fees. And that fees would be final, and that fees are paid by from the central government account. That means the commissioner fixed the fees and it should be paid by the central government. If you fails to do this audit, if you did not cooperate with auditor, in that situation, you are liable for best judgment assessment and you may attract penalty as well as prosecutions. Opportunity of being heard. After gathering all information from you and audit report and third party, he will give you a chance to say something. Whatever you want to say at this stage, you may uh, you may provide your submission. After this, he may go with your assessment. Section 143.3, 142.3 shall not be applicable in case of assessment under section 144. That is best judgment assessment. When he is going with best judgment assessment, he may not give you this opportunity again. Estimation by valuation officer in certain cases, section 142A. What is it? Sometime during the assessment proceeding, assessing officer notice that there is some investment made by you or there are some expenditure made by you, some undisclosed investment are there, some gold jewelries are there, then what would be the value of those assets, that property? It is not possible for him, that means the assessing officer, to value it correctly because he is not expert in valuation. He is expert in income tax. So how to handle this type of situation? Our income tax suggests that in this type of situation, assessing officer will ask this report, valuation report, from the valuation officer which is there in the department. On the basis of the report submitted by the valuation officer, he will pass the assessment order. Scrutiny assessment. What do you mean by scrutiny assessment? What do you mean by scrutiny assessment? Anything? Scrutiny assessment. What is a scrutiny assessment? First of all, keep in your mind that scrutiny assessment does not mean there is some doubt. Scrutiny does not start with suspicious amount. The scrutiny assessment does not start with suspicious mind. Here, assessing officer just want to ensure himself whether the information, whether the computation made by you is the correct or wrong. He just want to ensure himself. The scrutiny assessment does not start with the state of mind that there is something which is something fishy. That is not the purpose of the scrutiny assessment. Scrutiny assessment does not start with suspicious mind. Scrutiny assessment start just to ensure the whatever you are offered as income, whether your income tax computation is correct or wrong. Okay, were the assessing officer or the prescribed income tax authority. Earlier, there was the word only the assessing officer. Now this phrase is also inserted. Any idea why this phrase has been inserted, or the prescribed income tax authority? Anyone? Why this phrase is inserted in this para? Neetaji? Why this phrase are inserted? Any idea? Nowadays, faceless assessment are going on. Nowadays, faceless assessment are going on. What do you mean by faceless assessment? What do you mean by faceless assessment? Anyone? What is faceless assessment? Nowadays, what happened? You are earlier what happened? You are supposed to your assessing officer, your jurisdictional officer are have only rights to do to conduct a scrutiny assessment. Nowadays, in those era, what happened? If notice for scrutiny assessment was there, the SSC or authorized representative of the SSC are supposed to visit the office of the assessing officer with taking all the evidence with him. He will produce in those documents before your assessing officer. But nowadays, faceless assessment is going on. Faceless assessment means well, person to person. That means man to man touch are not there. Man-to-man personal hearing, personal meetings are not there. So what happened? It may be possible that if you are located in Kolkata, your assessment can be done by the income tax officer who is located in Surat. Or if you are located in Surat, your assessment may be done by the income tax officer who is located in Bengaluru. It is possible. So he may or may not be your jurisdictional assessing officer. Why these things are done? Just to curtail the corruption. The main reason of the corruption is this man-to-man meeting. One assessing officer is meeting with the assessee or authorized representative of the assessee, then their chances of corruptions are there. To eliminate this corruption, government started this faceless assessment. When suppose I am the assessee, when I got the notice for scrutiny assessment, I am not aware about who is the assessing officer who is assessing my income tax. Who is the assessing officer? I don't know. In India, there are so many assessing officer. I don't know who is assessing who is conducting my assessment. If I don't know, then how could I offer some bribe or like this? Or reverse situation, you're assessing in case of faceless assessment, assessing officer does not know the name or the detail of the assessee, the contact details of the assessee. So chances of corruptions are eliminated or minimized. This is reason the faceless assessment are there. Totally technological driven. You are supposed to upload all those documents, whatever you are supposed to submit, and if you require, then only personal here, that is faceless, that video conferencing may be allowed to you. Else, I'm not aware about who is my assessing officer, and assessing officer is not aware about my contacts. This is the beauty of the faceless assessment. That means just like your answer script, when you submit your answer script to in case of your examination, who is examiner, you are not aware about that, and examiner also don't know about you. In that situation, chances of corruptions are minimized. That concept has been taken in the income tax department also with the help of technology. Now, since your assessment is not done by your jurisdictional assessing officer, ideally, no other income tax officer are empowered to do assessment. In that situation, any assessment done by non-jurisdictional officer should be void, is wrong, should not be tenable. To empower other income tax authority to do assessment for you, they introduce this statement, this phrase in this section 143.3 for all the prescribed income tax authority. Any income tax authority who are prescribed by the board, who can be, that person, that income tax authority are empowered to do assessment for you. One, the assessing officer or the prescribed income tax authority. If this phrase was not there, then this total faceless assessment are not tenable. Consider it necessary if the assessing officer or any other prescribed income tax authority considers it necessary to ensure that the assessee has not, be careful, consider it necessary to ensure, it is not suspect, it is not doubt, it is start with to ensure that the assessee has not understated his income or declared excessive loss or underpaid the tax. Just want to ensure whether you have not understated your income, declared excessive loss, or in any way underpaid your tax. We want to ensure ourselves you did not did these things. He can make scrutiny in this regard and gather such information and evidence as he deems fit. On the basis of such information and evidence so collected, he shall pass an assessment order. Be careful, if you fails to file return of income under section 139(1) or in response to any notice under section 142(1), this scrutiny assessment is not possible. Why not possible? If you did not submitted anything, then I want to ensure what to ensure. There is nothing. And what I want to ensure, I don't want to ensure anything. So to make ensure there is something in the on the record. If you fails to furnish your return of income, scrutiny assessment under section 143(3) is not possible because there is nothing to ensure myself. So for the purpose, if you did not file your return under section 139 or in response to any notice under section 142(1), your scrutiny assessment is not possible. Be careful, in that situation, intimation is also not possible. For what is the procedure for a scrutiny assessment? Notice for a scrutiny. First of all, your assessing officer is required to serve a notice for a scrutiny. Assessing officer shall serve. What is the meaning of serve? It is not issued, it should be served. There is a difference between issue and served. Issue, that means whether the notice has been received by you or not, it is not my concern. However, if the word serve is used, then that means the notice should be received by you. If you claim that the notice was not received by you, then I am supposed to prove that the notice was received by you. Onus to prove is on me whether the notice was received by you or not. If you claim that notice was not received by you, if the assessee claimed that notice was not received by him, then assessing officer is supposed to prove that notice was duly received by you. If your assessing officer fails to prove that, entire proceedings become void. Entire proceeding is not tenable. That means the service of the notice is one of the most important thing in the process of this scrutiny assessment. Your assessing officer or any other prescribed income tax authority shall serve on the assessee a notice requiring the assessee on the date specified in the notice what you are supposed to do on a particular date which is specified in the notice to produce or cause to be produced any evidence on which assessee may rely in support of the return. Produce or cause to be produced. That means you may submit the detail yourself or your authorized representative may submit or may produce those things. Any evidence on which assessee may rely, whatever you rely and whatever you thought, whatever you think that these documents are good for in support of my claim in the return, you are supposed to submit all those documents. However, no notice shall be served, be careful word served, on the assessee after the expiry of 3 months from the end of the financial year in which the return is furnished. That means, can I say that previous year 22-23? Previous year 22-23. What do you mean by? It will start from 1st April 2022 and ends on 31st/3/2023. You are supposed to submit return of income by 31st July 2023 or 31st October 2023 or 31st November 30th November 2023. Just wait for the conclusion of this financial year. When this will be end, it may be end on 31st 3 2024. Add 3 months to this, comes to 30th June 2024. That means in respect of assessment year 23-24, your notice for scrutiny assessment shall be served on you on or before 30th June 2024. On or before 30th June 2024. The notice shall be served on the assessee after the expiry of 3 months from the end of the financial year in which return was furnished are not a valid notice, hence scrutiny assessment should be void. Clear? One more example. Suppose your assessing officer issued a notice for assessment year 2023-24 on 29/6/2024. Issued notice. And this notice are received by you on 2nd July 2024, stating that you are supposed to produce or tasked to produce these details by 10th of the July 2024. What you should do? What you are supposed to do? In this situation, what you are supposed to do? You are supposed to submit the details or any other action you are required to take. Nitaji? Notice was issued by the assessing officer on 29th June 2024 pertaining to the assessment year 2023-24, and you got this notice, you received that notice on 2nd of the July 2024, and the notice stated that by 10th July 2024, you are supposed to submit the relevant details information for your return. What should be your course of action? You are required to submit the details or something else you are supposed to do. Nitaji replied, time limit expired as received as the notice was not properly served within the 3 months from the end of the relevant financial year in which return was submitted. So this notice is not a valid notice. So this notice is not a valid notice. So this notice is not a valid notice, hence no action is required. No action should be taken by you. Now, how to serve this notice? Any idea? Is it through only speed post or something post? Physical copy is required to be served or something else? How this notice is required to be served? Any idea? Only physical copy is required to be served through speed post or any other way. It may be physical copy through personal of income tax department. It may be through speed post or any post, or it may be through email. It may be through email. Which email? The email which is furnished by you in the income tax return or latest income tax return, or it is in the PAN database. Address. Which address they are supposed to post your notice? The address may be as per your database, PAN database, registered post with your database, PAN database, address provided by you in the return, address provided by you in the latest return. That means the address which are in record of the income tax department, they may post this letter, this notice at that address. And still you are not, and that report suggests that the speed post register or registered post report suggests that the delivery was taken place as on that particular date on this address, then it is an evidence of proper serving. In case of email, if the email are issued by the income tax department within that period, then it is assumed that proper notice was served on you within due date. In case of email, you cannot say that I did not read, I was out of town. These explanations are not valid. If the email was sent by the assessing officer at appropriate email address within the given time, we will presume that it was properly served on that date only. You cannot claim that it was in the junk mailbox. I was out of town. My mobile was not working. My laptop was not. That excuses are not valid one. Done. No notice shall be served on the assessee after the expiry of 3 months from the end of the financial year in which the return is furnished. Suppose getting this notice, you are supposed to provide information which he is asked. After collecting such information and hearing such evidence as the assessee produced in response to the notice under section 143(2), and after taking into account all relevant materials which the AO has gathered, by making inquiry under section 142 or any other inquiry, the AO shall, by an order in writing, the AO shall, by an order in writing, that means order should be written. If the order is oral, then it is not a valid order. Furthermore, it should be a speaking order. What do you mean by speaking order? What do you mean by speaking order? Speaking order means your assessing officer, suppose disallowed a particular expenditure. Your total income as per your return was 10 lakh. Your assessing officer disallowed a particular expenditure of rupees 2 lakh. He added this one and just recalculated your income. If this addition was made by assessing officer without citing proper reason, without giving reason for this addition, this assessment is not a valid one. Whatever addition or disallowance he are supposed to make, the reason thereof, whatever be the reason thereof, should be mentioned in the order, should be there in the order. Any addition or deletion without giving the reason is not a good assessment order. So I can read it like the AO shall, by an speaking order in writing, make an assessment of the total income or loss of the assessee and determine the sum payable by him or refund of any amount due to him on the basis of such assessment. Suppose your assessing officer passed this type of order, citing some reason, he made computation 10 lakh, 2 lakh, and there is some reason are there, and computed your total income 12 lakh. That's all. This is not a valid order. What is missing? This is not a valid order. Why? What is missing? Again, I am reading. The AO shall, by an order in writing, make an assessment of the total income he done or loss of the assessee he done, and this part he missed, and determine the sum payable by him or refund of any amount due to him. Without calculation of your tax liability, how could you determine your refund, or how could you determine the amount due to you? So this is not a valid return. What should he are supposed to do after computing this income? He is supposed to calculate your tax liability, consider TDS, advance tax, etc., then interest, etc., and this figure he is required to compute whether refund is required to be issued or demand are there. without doing this sheet, without making this sheet, if he's making this order as well as this computation, this is not a valid one. So your assessment order should contain the reasons for addition or deletion, computation of total income, as well as computation of tax liability with refund due or demand. Done? Huh? Done? Any question? Time limit for completion of scrutiny assessment. Assessment under section 143.3 should be completed. Should be completed. The word served is not there. Not served. Should be completed within 9 months from the end of the relevant assessment year. Should be completed. The word here is not served. It may be possible. Ideally, for assessment year 2023-24, your assessment order under section 143.3 should be completed by 31st December 2024. 9 months from the end of the relevant assessment year. The last date of your assessment year is 31st 2024. Add 9 months to this, you will get the date 31st December 2024. That means assessment should be completed by this date. If your assessing officer complete the assessment by this date, but that order was served on you on say 2nd January 2025, is it a valid order? Is it a valid order? Is it a valid order or it is a wrong? What is your opinion, Nitaji? Order was passed. The order was passed by your assessing officer on 31st December 2024, but it was received by you on 2nd of the January 2025. Is it a valid order or it is a invalid order? Sir, it is a valid order. The time limit is this last time limit is for passing the order, for completion of assessment order. The time limit is not for serving the order. The time limit is for completion of order. The time limit is not for serving of order. Be careful, student. There is no time limit is provided for service of the order. The time limit of 9 months is applicable for completion of order. Is it clear? Nitaji, it is a valid order. Andalji, this is a valid order. Be careful. The time limit of 9 months is for completion of assessment order. It is not for service of order. Done? Please rectify yourself. It is a valid order. Done? This is not an invalid order. Nitaji, it is done. However, if your assessing officer ready all these details, ready all this computation, etc. on 31st 12 2024, but signed this on say 2nd January 2024 and served on you on 5th January 2024. This is not a valid order. Complete means complete in all respects. Unless and until he signed the order, this is not a complete. Even though he took the printout, he done all the sheet ready, it is not the complete. When he signed this, that should be considered as the date of completion. However, nowadays it is very fishy. So what they consider, the order is required to be uploaded in the server. The date of uploading should be considered as the completion of the order. Nowadays, the order is required to be uploaded in the server, income tax department server. So the date on which your assessing officer upload this order in the server, that is considered as the date of completion of the order. If it is by 31st December 2024, we will consider the order is completed within the given time, within the prescribed time limit, even though it is checked or examined or served on you by after this date. This is a valid order. Done. Is it clear? So in respect of timeline, I can prepare a just a 1 minute. For timeline, I'm making a time sheet. First day of the previous year for your examination 2022. First day of the previous year. 15th June 2022, you are required to pay 15% of your estimated tax liability as advance tax. Then comes to 15th September 2022, you are required to pay 45%. Then come to 15th December 2022, you are required to pay 75%. By 15th March 2023, you are required to pay 100%. 31st pre 2023, previous year ends. By 31st July or 31st October or 30th November, you are supposed to submit return. Then 31st 3 2024, assessment year ends. Here I can introduce one more date. 1st 4 2023, assessment year start. Then I'm going into there. By 30th June 2024, notice under section 143(2) for scrutiny. 31st 12 2024, assessment complete. This is the timeline. Please copy it. This is the timeline. Please copy it. Oh, I missed that thing. One minute. Now it is visible. Please copy it. This is the timeline for your assessment. Now it is visible. Please copy it. Now, I'm summarizing the provision of advance tax, interest, return, and assessment procedure. All are interconnected. Now, by 15th June 2022, that means in the previous year, you are required to pay 15% of your estimated tax liability as advance tax. If you fails to pay 12% of your tax liability by way of advance tax, then you are liable for interest under section 234C for this period, 3 months. Yes or no? Now, by 15 September 2022, you are required to pay 45% as an advance tax. This is a cumulative. If you fails to pay 36%, then you are liable for 234C for this 3 months at the rate of 1%. Further, by 15th December 2022, you are supposed to pay 75% as an advance tax. If you fails to pay this, then you are again liable for interest under section 234C for these 3 months. If by 15th March 2023, you are supposed to pay 100% as an advance tax. If you fails to pay, you are liable for 234C for this 15 days, which is equivalent to 1 month. Because if the rate of interest is on monthly basis, then part of the month is considered as full month. Your previous year end here. Still there is some shortfall. The meter for 234B is applicable. Interest under section 234B is applicable from here till completion of your assessment or payment made by you of the tax amount. Am I correct? If you fail to furnish your return of income by within this date, here one more date is required to be introduced, 2023 last date to file return. If you fails to furnish your return within 31st July, this due dates, and afterwards you are filing, then there are 2 consequences. Supposed to pay interest under section 234A, as well as you are liable for 234 late fee. Your assessment year end. Here you are notice is supposed to be served on you under section 143(2) for a scrutiny assessment, and by this date your assessment should be completed. Afterwards, after completion of your assessment, 30 days period are given to you for payment. If there is any demand to clear demand, 30 days are given. If you clear your demand within these 30 days, then fine. Else you are liable for interest under section 220 clause subsection 2. These are the total time chart for your assessment and your duty for previous year as well as assessment year. Hopefully it will be useful for you for revision of advanced tax, interest, return and assessment procedure chapter. Please copy it. If done, please inform me. Done, Nitaji? Andalji, is it done? Okay, now comes to another type of assessment, which is known as best judgment assessment. In the following situation, assessment shall be made. What do you mean by shall? That is mandatory. That is not choice. That is not on the choice of the assessing officer. It is mandatory in this type of situation. Best judgment assessment is the only assessment. Your assessing officer is required to do best judgment assessment. In the following situation, assessment shall be made under this section. 144 is not the choice, not the discretionary power of the assessing officer. He is supposed to follow this section 144 in case where these conditions are met. In the following situation, assessment shall be made under this section. If the person fails to file return under section 139.1, 139.4, 139.5, or if the person fails to comply with the terms of the notice issued under section 142.1, we already discussed, today we discussed 142.1, or if the person fails to comply with the direction under section 142.2, that is audit, direction for audit. If the person fails to comply with the term of notice under section 143.2, 143.2 scrutiny notice. Notice was served on you for scrutiny, but you fails to respond. So what your assessing officer will do? So how will your assessing officer assess your income? You fails to file return of income, or you fails to comply with the terms of notice which are issued under section 142.1. One direction for audit was issued to you, but you fails. One scrutiny notice is served on you, but you fails to comply. Then what the assessing officer, what the income tax department is supposed to do in that situation? They will make best judgment assessment. Suppose this is the matter of Nitaji. Notice under section 143.2 was served on Nitaji. Proper valid notice was served on Nitaji for scrutiny assessment for assessment year 2023-24. But Nitaji didn't respond it. So assessing officer is supposed to make assessment order under section 144. Best judgment assessment, your assessing officer pass and one-liner. Your income of Nitaji would be 100 crore. Accordingly, she is liable to pay 30 crore as tax plus interest, blah, blah, blah. Is this a valid order? Is this his best of his judgment order? Is this is a valid order? What do you mean by best judgment? This is my best judgment. Income of Nitaji is 100 crore. Accordingly, her tax liability would be 30 crore. Is it my best judgment? Is this order valid? Anyone? Only madam, is it a valid order? No, this is not a valid order. Best judgment assessment give freedom to the assessing officer to pass an order, but that order is not arbitrary order, not any figure order. He is supposed to establish, he is supposed to provide reason why he consider 100 crore as the income of Nitaji. If the reason is not there, then this order is not a valid one. It is not an arbitrary figure. It should not be arbitrary figure. How could he establish? On the basis of information he possesses. On the basis of information he possesses, he shall estimate the income of Nitaji. And then the information and the reason how he calculated this, it should be in the order. It may be like that Nitaji has invested in LIC amounting to rupees 1,50,000. He purchased this type of, he paid credit card bills of rupees this much. So her income would be like this. There should be some logic for computation of this 100 crore or 10 crore or 1 crore or 10 lakh, whatever be the amount. There should be some logic, there should be some backhand evidence on the basis of which he determined this figure. It not an open figure case, it is not any figure case. judgment he is supposed to take, but on the basis of certain evidence. If this is an arbitrary figure, this order is not a valid order. Even though this is a best judgment, there should be some 100 crore. There is no judgment at all. Where is the judgment? The name of the order itself say there should be judgment on the basis of certain thing. How could you take the judgment? The income of Netaji is 100 crore or 1000 crore. It is not a judgment. So it should be based on appropriate evidence, some calculation that should be mentioned in the order, and accordingly, the amount, the income of Netaji should be computed by your assessing officer. Done. However, as per section 1, in this 4 situation, it is mandatory for assessing officer to go with 144. Further, as per section 145(3), if the AO is not satisfied with the correctness or completeness of the accounts of the assessee, or if no regular method of accountancy or accounting standards are followed by the assessee, then AO may make, in this situation, he may make assessment in the manner provided under section 144. That means this is a discretionary power, and this is mandatory for assessing officer. Done. Assessment shall be made by the AO to the best of his judgment after considering all relevant material which he has gathered. It cannot reduce the tax liability of the assessee by assessment under this section. However, in any circumstance, tax liability cannot be reduced under this section. Show cause notice. Our income tax department is good. Even though you fails to respond to the scrutiny notice, etc., your assessing officer, before passing order under section 144, again, still give an assessee a reasonable opportunity of being heard. Such an opportunity shall be given by serving a notice called show cause notice, calling on the assessee to show cause on a date and time specified in the notice why the assessment should not be completed to the best of my judgment. That means before passing again one more notice, he is supposed to serve on you. That notice is known as show cause notice. In that notice, he is asking why your assessment should not be made under section 144. Now, however, if you fails to respond to notice issued under section 142(1), show cause notice he may not issue to you. That means in out of 4 reasons, in 3 situations, he is supposed to issue show cause notice to you. However, in case of 142(1), if there is a failure to respond notice issued under section 142(1), he may not issue this show cause notice. Now, against this show cause notice, you may respond, you may not respond. You may not respond. If you didn't respond to this notice, surely he will pass an order under section 144. If you respond to this notice and that response is satisfactory to him, then he will drop 144 and again go with 143(3). And if the response is not satisfactory, then he will again go with 144. And what is the satisfactory response? It may be happen that you replied that I was sick, ill, there was some accident, there was some XYZ reason, so that I fails to respond the notice properly. Please give me some time, blah, blah, blah. If the reason is valid, then he will drop 144 and again switch to 143(3). If the reason is not satisfactory to him, in that situation, he will proceed with 144. And if still you didn't respond, to this show cause notice, then surely he will proceed with 144. Time limit for completion of assessment, the same time limit is there, 9 months from the end of the relevant assessment year. Done? Is it clear? Is it clear? Period excluded from time limit for completion of assessment. Ideally, there are 9-month period from the end of the relevant assessment year. Ideally, for assessment year 2023-24, scrutiny of best judgment assessment, that is regular assessment, should be completed by 31st December 2024. Ideally, this is the deadline for your assessing officer. But what happened if your assessment proceedings were stayed by any court, stayed by any order or injunction of a court? It may happen. There are certain circumstances where this time limit is extended. There are certain circumstances which are given in this. There are a few more slides for this. The list are there. This period is extended. For example, time taken in reopening the whole or any part of the proceeding or is giving an opportunity to the assessee to be reheard under the proviso to section 129. What is it? Suppose Mr. X was the assessing officer. Opportunity of being heard by given by him to you. You discuss the entire matter with him. All of a sudden, Mr. X was transferred to some other department. In place of Mr. X, the person Mr. Y is there. Now you are seeking for rehearing. Now you want to discuss the entire matter afresh before Mr. Y. In this situation, the work done by Mr. X is supposed to be repeated. In that situation, you are supposed to request Mr. Y, and once it is done, the period in this rehearing should be considered, should be added in this period. Suppose there is 30 days is taken in entire proceed, so 30 days should be added in this period. That means in that situation, your due date for completion of assessment, instead of 31st December, it would be 30th January 2025. Done? Similarly, period which during which the assessment proceeding is stayed by an order or injunction of a court. Suppose there was a stay against the proceedings for 30 days or 35 days. So your period would be extended further for 35 days. Period commencing from the date on which the assessing officer intimate under the proviso to section 143(3). What happened? This is the special type of assessment, scrutiny assessment. What happened? The situation is like this. You are claiming exemption under these sections. Your assessing officer during the course of proceeding assessment procedure notice that certain conditions which are supposed to be fulfilled for getting this exemption are not complied. In that situation, instead of taking the hard action against you, that means rejecting your exemption, he will contact with the prescribed authority for giving this exemption. Depending on the answer of this prescribed authority, he will pass the assessment order. If this prescribed authority suggests that okay, this condition are not mandatory, just go with exemption, then he will provide the exemption. If he suggests that this condition are not satisfied, so reject the exemption, then assessing officer will reject the exemption. So for flowing of this information, there may be some time gap. Some time is required. During this time, your assessing officer is not completing your assessment. That particular time taking in this approval or rejection, this formalities, whatever time is required should be your assessment date, your due date for completion of assessment should be extended by this particular time. in this procedure, time taken in this procedure. Similarly, your books of accounts are required to be audited under section 142(a) as per direction given by your assessing officer. For those number of days for which between the this direction and your submission of the audit report, your assessing officer does not completed the proceedings, the time taken in this audit is required to be added in the 31st 12 2024. Similarly, valuation officer under section 142(a), if the case are referred to 142(a) for to the valuation officer under section 142(a) for valuation of any investment or investment in assets or property, the time taken by that valuation officer is required to be added in the ideal due date of 31st December 2024. Settlement commission is now not a situation, so I'm not going into this. Settlement commission is not taking any new cases, it is gone. Advanced ruling authority say, I'm coming to this last para. This is you are supposed to consider. Suppose ideally you are supposed to complete the assessment by this date. As on 25th December 2024, High Court stayed the proceedings. High Court issue an order, and due to that order, your proceedings is stayed or injected, is issued. This stay order was there for 30 days. This stay order was for 30 days. So accordingly, again, this assessment proceedings start from 24th January 2024. Ideally, the time has already been expired. In this situation, 30 days was wasted, was not the work was not done by the assessing officer during this 30 days. In this situation, again, the X period would be 30 days. Now check, at least 60 days should be given after restart. After restart, there should be at least 60 days should be there to complete the assessment. In that situation, your assessment order is not plus 30 days, it is should be 60 days. That means 24th Jan, 24th Feb and 24th March, considering that ideally it would be 26th March because of Feb of 28 days. 26th March would be the cutoff date for completion of this assessment. Is it clear? That means whenever your assessing officer restart the assessment proceedings, at least 60 days should be there. If extension period is of only 30 days, then it should be extended up to 60 days. However, if extended period is for 4 months, then it is fine. For example, I'm taking one more example. Suppose in the month of November, 1st November 2023, there was a stay for say 30 days. So during the entire November month, he did not work. On 31st, when he started his work on 1st December 2023, ideal date would be 31st 12/2023 plus 30 days. Now, at least check it whether he is getting from 1st December 2023, he should have 60 days in his hand. If there is no 60 days, then the period is suitably extended to 60 days. Done? Any doubt? Is it clear? How to calculate this period after this limiting after this restrictions? At least 60 days should your assessing officer have. Then only that 60th day should be considered as the date of completion of assessment. Rectification of mistakes. What do you mean by rectification of mistakes under section 154? What do you mean by rectification of mistakes? After completion of assessment, you have 3 course of action. 154, appeal and revision. appeal before, ideally before CIT appeals, revision, and 154. Revision under section 263 and 264, CIT appeal, then ITAT, then High Court, and then Supreme Court. And one more course of action in your hand is 154. What are the situation? Suppose you are in an institution, you are an employee of institution. There is a little fight between you and your colleagues, Mr. X and Y. Y hit Mr. X, slap Mr. X. Now, Mr. X have three type of action, three course of action. First, if Y says sorry and settle the issue, then it is fine. Else, he may go to the senior of your company. He may go to police. That means third person. These are three situations. If he go to the police, that is appeal. That means third person. When this Mr. X go with the superior authority of the company, then that means senior officers of the company, then it is a matter of revision. If Mr. Y settle the issue that by saying sorry or like this, then this is the matter of 154. That means these are not interchangeable. These are three different situations, three different course of action which Mr. X have after completion of assessment. First is 154, that is next is appeal, and then another one is revision. Revision under section 263 and 264. Right now we are discussing about 154. 154 means the matter is settled between your colleague and yourself. No involvement of senior person, no involvement of third person. Here, under section 154, the person who committed the mistakes are required to say sorry. This is the ideal situation. If Mr. Y committed the mistakes, then he is supposed to say sorry, then matter will be resolved. This is the ideal situation. 154 called rectification of mistakes. That means there may be certain mistakes in the order which is not debatable, not arguable. What type of mistakes are there? Suppose your assessing officer, while passing the assessment order, make 2 + 2 5. Is there any debate? This is mistakes? No. Your assessing officer disallowed an expenditure where Supreme Court in a particular decision allowed this expenditure and there is no change in the law. He is bigger than Supreme Court? He is not the higher authority than Supreme Court. He is supposed to obey the order passed by your Supreme Court. So this is the mistakes which is apparent from the record. This mistake is non-debatable, not disputable. If your order passed by assessing officer contained this type of mistakes, then it can be rectifiable under section 154. Who will rectify these mistakes? Who passed the order. When I'm saying that who passed the order, I'm not referring to the particular person, I'm referring to the post who passed the order. That means rectification under section 154 is possible, and who is supposed to pass this order? The income tax authority who issued that order. An income tax authority is empowered, suo motu, or an application made by the assessee to rectify any mistakes which is apparent in order passed by him, whether favorable to the assessee or favorable to the revenue. It hardly matters. An income tax authority who passed that order is empowered, suo motu, or an application made by the assessee to rectify any mistakes. It is not a debatable issue. Suppose there are debate whether this expenditure is allowable or not allowable. This type of matter are not considered under section 154. If it is a debatable issue, this type of issues are not considered under section 154. The issues which are not debatable, non-disputable, arithmetical mistakes are supposed to be considered under 154 rectification order. rectify any mistakes which is apparent, and that is apparent in the order passed by him. Where inquiry is supposed to be done to establish whether there is a mistake or not a mistake. This type of mistakes, this type of error are not considered under section 154. Rectify any mistakes which is apparent in an order passed by him are supposed to be considered, or amend any intimation issued under section 143(1), that is intimation or deemed intimation. What do you mean by deemed intimation? In cases where there is no refund, no demand, whatever submitted by you, the AD of the return is considered as a deemed intimation. Amend any intimation issued under section 200A or 206CV, that is for TDS or TCS. Such order of rectification must be passed in writing. Which authority will pass? The same authority who passed this 143(3) order is supposed to pass. If there is a mistake apparent in an order, rectification order is supposed to be passed by the same authority. Time limit for rectification: within 4 years from the end of the financial year in which the order sought to be amended was passed. That means, what is the time limit for passing this order? Suppose your assessment order was passed on 31st/12/2024. Suppose your assessment order was passed on 31st/12/2004. The last date of this financial year is 31st/03/2025. Add 4 years, comes to 31st/3/2029. That means rectification order under section 154 shall be passed by the income tax authority by 31st/3/2029. 4 years from the end of the financial year in which the order sought to be amended was passed. Suppose your assessing officer rectified this order. There was some mistake, 2 + 2, he made 5. So there was mistake apparent from the record. He rectified this order by 31st/3/2027. In this rectification order, he made another mistake, 2 + 2 = 3. Let me know by which date he is supposed to rectify this order. That means rectification of rectified order, is it possible? Or if it is possible, then by which date it is supposed to be made? Anyone? By which date it is supposed to be rectified? Anyone? Anyone have any idea? By which date this order is required to be rectified? Neetaji is saying that total rectification duration 4 years. That is by within 31st/3/2029 or something else. 4 years. Now from which date we are supposed to consider? It is from 31st/3/2025 or something else. What is your idea? Neetaji is saying that it is within 31st/3/2029. No. The 4-year period is supposed to be recalculated from this date. That means 31st/3/2031. 31st/3/2031. What is the language? Within 4 years from the end of the financial year in which the order sought to be amended was passed. The order sought to be amended. First, earlier this was the order which is sought to be amended, which was passed on 31st December 2024. Now I am passing this order. The order sought to be amended is now this one. The order which is sought to be amended, now it is passed on 31st 3 2027. So 4 years from the end of the financial year in which this order is passed, we are supposed to get the rectification order can be made under section 154 by 31st 3 2031. If this was made, if this order was rectified on 30th June 2027, in that situation, we are supposed to wait till the end of the year, 31st 03 2028, and then 4 years. That means in this situation, the order under section 154 to rectify this second order can be passed by 31st 3 2032. Is it clear? Is it clear? Is it clear? The period of 4 years should be recounted, recomputed from the date of the order of 154. However, in respect where application is made by the assessing officer, that means it is pointed out by the assessee before assessing officer that there is a mistakes in the order. Say your assessing officer passed the order 2 + 2 5 as on 30th December 2024. You as an assessee pointed out as on say 2nd of the April 2025, stating that applying that application made by you, stating that there is a mistake which is apparent from the record. In this situation, if you made an application before your assessing officer, in that situation, the mistakes was already pointed out by you. So work is required to be do some faster way. In this situation, your assessing officer will pass two type of order, may pass two type of order. He will accept, yes, there is a mistake, or he may reject. He may reject. He may say that there is no mistake. He may say, yes, okay, there is a mistake. In either way, whether to accept or reject, he will pass the order within 6 months. Within 6 months from the end of the month in which application is received by it. That means end of the month, 30th April 2025 plus 6 months. So it would be 31/10/2025. Within, I believe this is the yeah, okay, 31/10/2025, your assessing officer will pass an order either accepting, that means making amendment, or refusing, rejecting the claim made by you. However, this should be made within the overall boundary line of 4 years. However, this should be made in overall boundary of 4 years. Is it clear? Is it clear? Now, before passing rectification of mistake order under section 154, opportunity of being heard should be given. Ideally, no order can be passed without giving an opportunity of being heard. 143.3 without giving opportunity of being heard is not a valid order. Best judgment assessment, barring some situation 142.1. Till last moment they are issuing show cause notice. That means they are trying to give you opportunity of being heard. Here also, if assessing officer is passing an order under section 154, which is prejudicial to your interest, that means your income may be increased or your refund may be reduced. In that situation, opportunity of being heard should be given to you, even though mistake is apparent. If such a rectification order is prejudicial to the interest of the assessee, if it is prejudicial to you or director or collector, in that situation, opportunity of being heard must be given to the assessee before passing such order. Where any such amendment has the effect of reducing the assessment or otherwise reducing the tax liability of the assessee, the AO shall make and refund. And if your liability is reduced by this rectification order, then whatever the amount you are eligible for refund, the differential amount should be refunded to you. And where your liability is increased, in that situation, demand notice under section 156 should be issued to you, and accordingly you are required to pay within 30 days, else 222 subsection 2 interest under section 222 subsection 2 will be applicable on you. Mistake apparent from record may be mistake of fact or mistake of law. It may be any type of mistake, 2 plus 2 equal to 5, or deductions was not given in spite of the decision of the Supreme Court, or any other type of mistakes are may be there, but it should be apparent. The mistake should not be debatable. The mistake should be apparent without digging any more records. This is apparent that there is a mistakes. Done? Clear? Power to Joint Commissioner to issue direction in certain cases. What is it? Joint Commissioner is the boss of your assessing officer, maybe the boss of your assessing officer. Be careful. Assessment order. Ideally, assessment order cannot be passed any authority above Joint Commissioner. Do you know this thing? You may have heard about this word commissioner, chief commissioner. They are not your assessing officer. Principal chief commissioner, principal commissioner, they are not your assessing officer. Assessment can be done by an authority joint by joint commissioner or below that. That means your joint commissioner, income tax officer, or deputy commissioner, they can be your assessing officer. Your commissioner cannot be a jurisdictional commissioner, cannot be your assessing officer. Income tax inspector cannot be your assessing officer. Order is required to be passed maximum by joint commissioner. Joint commissioner or their subordinate can pass the assessment order here. That means joint commissioner is the boss. Joint commissioner may, on his own motion or on a reference being made by the assessing officer or an application of an assessee. That means this section provides intervention of senior authority in the proceedings. That means there are three situations. JC on motion, on request, reference being made by your AO or reference being made by you. Joint Commissioner may, the word is may, not mandatory, may, on his own motion or on reference being made by him by the assessing, reference being made to him by the assessing officer or on the application of an assessee. Call for and examine the record of any proceedings in which an assessment is pending. If it is done, then this right is not there. And be careful, and is there. Having regard to the nature of the case or the amount involved or for any other reason. That means in this situation, he may guide his subordinate, that means assessing officer. He may guide to the assessing officer the particular on the particular matter if it is referred to him. What to do? Generally, we ask our boss. In some circumstances, we are supposed to do something, but we don't know how to manage this thing. We may we may request our boss how to please guide us how to do. This is the section where this helping hand are there. Joint Commissioner on reference made by AO or on application made by the assessee. Call for and examine the records of any proceedings which are pending. Once it is done, when assessment order is passed, then 144A is not relevant. Is pending, and having regard to the nature of the case or the amount involved or for any other reason, issue such direction as he thinks fit for the guidance of the AO to enable him to complete the assessment, and such direction shall be binding on the AO. Such direction shall be binding on the AO. Why binding? Because if your boss is directing something, then you are supposed to obey the order of your boss. There are no other way. That means whatever the direction is issued by the Joint Commissioner to the assessing officer for this particular assessment, that direction should be uh, followed by your assessing officer. In any circumstances, direction should not be like this, and our umbrella direction should not be there. Add 1,000 crore income to him. No, this is not the direction. Direction prejudicial to the SSE. If something is prejudicial to the SSE, shall not be issued without giving an opportunity of being heard to the SSE. However, direction of investigation, like it's a general direction issued by Joint Commissioner. Please check it deeply, or please check it properly. This type of direction are not prejudicial. It is a general direction. This is not considered as a direction issued by him, which is prejudicial to the SSE. That means 144A is a section where superior authority comes into play while passing assessment order. Be careful, JC himself may be a assessing officer. Is it clear? Is it clear to all? Neetaji, Andalji? Is it clear to all? Any question, any query till now? Hopefully you updated some of your knowledge through this session. Still, if you have any query, any questions, please raise. Again, I'm not going through word by word of your study material. I am just going into the insight of the provision. Try to give better understanding of the provision. Good, there is no query. Service of notice. We discussed where it is important. Service of notice 143.2. If you remember. The service of a notice or a summon or requisition or order or any other communication under this act may be made by delivering or transmitting a copy thereof to the person therein named by post or by such courier service as may be approved by the board, or in such manner as provided under the Code of Civil Procedure for the purpose of service of summon by email or by any other means of transmission of documents as provided by the rules. The date of posting of any communication on the website, email, or other electronic medium shall be deemed to be the date of service. Be careful. Be careful. Notice is valid if correct in substance. And one more thing I want to discuss here in that service of notice part. If you think there is no valid notice is received by you, notice was not served on you, you are supposed to point out this at the time of assessment procedure. Suppose the notice is supposed to be issued served on you by 30th June 2024, but actually it was served on you on 2nd July 2024. Considering this a valid notice, you are not aware of income tax provision. So considering this notice as a valid notice, you responded. You responded, you submitted all details. Assessment is completed by say 31st 12 2024. Addition is made by your assessing officer, say 50 lakh. Now, at this stage, you approach some CA, some professional person, and he pointed out that, oh, what you done, this is not a valid notice. So entire proceeding is wrong, entire proceeding is invalid. So this is not the situation. If this is invalid, you are supposed to point it out at the time of proceedings, this assessment proceedings. Once assessment is done, then after at the stage of appeal, etc., if you are pointing out this thing, we will not consider this notice as an invalid notice. If you are responded and no, you didn't point out during these proceedings, this notice become valid. So be careful about these things. This you cannot take the ground that the notice was not a valid notice because it is served on a later date after completion of this proceeding. Before appellate authority, you cannot raise this question unless and until you pointed out this before the assessing officer. In that situation, what we are trying to do in the submission made before the assessing officer, we submit that this notice is supposed to be received by us on this date, but this notice is issued received by us on this particular date. So we are submitting all these details under dispute. So dispute should be raised before completion of assessment. Be careful about this thing. Notice is valid if correct in substance. Sometime what happened? Mr. X, the address of Mr. X is say 123 Mangur Avenue, Block C, Kolkata 55. In the notice, instead of 55, it may be mentioned at 65. By mistake, it was mentioned as 65. The notice in the name of Mr. X, the address more or less is proper. The notice is duly served. The only mistake in the address. That means the notice in substance is correct, but there is some mistakes. Ideally, this is not a valid notice because address is wrong. If it is received by the assessee, then it became a valid notice. If in substance this notice is correct, then this is considered as a valid notice. Any defect, or maybe sometime it may not be signed. Some stamp was there, it is not properly signed or like this. It may be considered as a valid notice. No return of income, assessment, notice, summon, or other proceeding furnished or made or issued or taken or purported to have been furnished or made or issued or taken in pursuance of any of the provision of that shall be invalid. No, shall be invalid. That means shall be valid. Shall be invalid merely by reason of any mistakes, defect, or omission in such return, assessment, notice, summon, or other proceeding. If such return, assessment is in substance and effect in conformity with or according to the intent and purpose of that. If in substance it is correct, then this notice is a valid one. छोटी छोटी बातों को दिल पे ना लगाना. Is it clear? Any other question? Any query? We have last 10 minutes. If you have query, any questions, please raise. If anyone have any question, any query, please raise. Hopefully you enjoy the session. We discussed little bit detailed discussion regarding assessment procedures. No query. Anyone? Andalji, is there any query? Next, we will go with probably with transfer pricing, or if you permit, if whatever topic you suggest, not today, but in the next session we will do. If there is a special any requirement, please suggest. I will pick that topic. Nitaji, any special requirement? Any particular query, any particular topic, if you suggest, then we will take that topic in our next session. Else, I will go with the DTA, double taxation avoidance agreement, or some other chapter topic from transfer pricing. Or if you suggest business restructuring decision, that means tax planning decisions, whatever you want, please let me know. We will go with. Okay, transfer pricing is fine. Next, whatever, I believe it is on 24th or 21st of the November, we will go with double taxation avoidance agreement. Okay. Hopefully the session is useful for you, and we discuss some detailed discussion has been made for assessment procedure. Thank you. Please comment if you like the session or any feedback from this session. Please comment. Shall I conclude the session? Thank you. Is it useful? Thank you. Happy Diwali to all. Enjoy the festival of lights. Thank you.